Hello, everyone, and thank you for joining us today. In this presentation, I'll be walking you through an in depth analysis of Commerce Bancshares Inc., a regional commercial bank that has built its reputation in stability, strong customer relationships, and disciplined financial management. Commerce Bancshares has been serving its communities for over 150 years, maintaining a consistent record of prudent management and innovation. What makes this bank particularly interesting is its ability to balance traditional banking principles with modern digital growth, maintaining superior assets qualities while continuing to improve operational efficiency. Throughout this presentation, we'll explore the bank's business strategy, financial performance, and long term outlook. We'll look at its major income drivers, key financial ratios, and overall competitive positions in the regional banking space. I'll also highlight how Commerce's conservative risk approach and ongoing digital modernization strategy have positioned it for suitable low risk growth in the years ahead. Here's how the presentation will flow. First, we'll begin with the bank's business strategy, which defines its foundation and direction. Next, we'll analyze non-interest income, one of Commerce's Bancshares' biggest strength that differentiates it from many peers. After that, we'll move into a series of financial ratios analysis, covering loan to assets, core deposits, cost efficiency, and profitability metrics. We'll then discuss the SWOT analysis, looking at the bank's strength, weaknesses, opportunities, and threats in the current market. Following that, we'll review some of the major milestones that have shaped Commerce Bancshares over time. And finally, we'll wrap up with future expectations, highlighting how the bank plans to grow while maintaining its conservative relationship driven model. By the end of this presentation, you'll see how Commerce Bancshares has successfully combined financial strength, innovation, and sound management to remain one of the most stable and respected regional banks in the country. Let's begin by taking a closer look at Bancshares' business strategy. Business strategy. Commerce Bancshares operates as a regional relationship-driven commercial bank, structured across five main business segments: consumer banking, commercial banking, wealth and trust management, payment and card services, and institutional and treasury operations. The bank's strategy focuses on conservative lending, expanding its digital and mobile banking, growing fee-based income, and pursuing operational efficiency, all while maintaining strong asset quality and capital strength. In simpler terms, Commerce seeks stable low-risk growth by modernizing its customer experience through updated technology and disciplined management. Now that we understand the bank's foundation, let's see how its diversified income model supports its long-term growth. Non-interest income. Non-interest income is one of the Commerce Bancshares' greatest strengths. Its trust, card, and payment operations generate a steady stream of revenue that reduces dependence on lending spreads. This diversification has helped the bank sustain earnings enough rate changes and economic cycles. Management's focus on digital card systems and wealth management continues to boost recurring, high margin income. In short, none of non-interest income has become a core pillar of profitability, showcasing how commerce has evolved beyond traditional banking models. Next, let's look at how the bank balances growth and risk through its loan management. Loan to asset ratio chart. Commerce Bancshares maintains a disciplined loan to asset ratio, reflecting responsible lending practices and a strong liquidity position. This ratio demonstrates how the bank effectively deploys assets without exposing itself to excessive credit risk. The trend shows that Commerce continues to grow its loan portfolio responsibly, supporting profitability while maintaining stability. Now that we've reviewed lending discipline, let's turn to deposits, which represent the foundation of a bank's funding strength. Core deposits to total deposit chart. The core deposits to total deposit ratio highlights the stability of the bank's funding base. Commerce Bancshares consistently reports over 70% of total deposits as core deposits, signaling loyal customer relationships and as a strong retail base. This high proportion reduces reliance on volatile market funding and provides a stable, low-cost source of capital. Together, these results reinforce the bank's solid liquidity position and reputation for sound, relationship-driven banking. Now that we've seen the strength of its deposits, let's move into a deeper strategic analysis throughout the SWOT framework. SWOT strengths. Commerce Bancshares has multiple strengths that set it apart from its peers. It shows stability and consistent profitability, maintains very high credit quality with minimal non-performing loans, and benefits from a core deposit base exceeding 70% of total deposits. Conservative underwriting limits defaults, and the bank enjoys strong returns on both assets and equity. It also benefits from diversified income streams and maintains cost efficiency throughout disciplined expense control. Lastly, the bank's continued investment in digital banking enhances scalability and improves customer experience. However, every institution faces challenges. Let's review some of their weaknesses next. SOWT weaknesses. Despite its strengths, Commerce Bancshares does face certain limitations. Its growth rate is lower compared to larger national competitors, and its operation remains concentrated in the Midwest, particularly Missouri and Kansas, leaving it vulnerable to regional downturns. It still relies heavily on net interest income, which makes profits sensitive to rate changes. Additionally, its digital transformation progresses more slowly than that of fintechs, and its smaller scale limits its marketing and technology advantages. Next, let's shift to opportunities that the bank can leverage for future growth. SOWT opportunities. Commerce Bancshares has significant room for expansion and innovation. Key opportunities include enhancing digital and mobile platforms, expanding wealth management, and serving more small and medium-sized enterprises throughout business lending. The bank can also grow fee-based revenues in cards, payments, and treasury services, partner with fintechs for efficiency, and expand into socially responsible and sustainable banking. These strategies would allow Commerce to strengthen consumer loyalty and remain competitive in an evolving financial landscape. Of course, no bank operates without risks, so let's discuss the external threats next. SWOT threats. Commerce Bancshares faces several external challenges. Interest rate volatility can pressure lending margins, and economic downturns may increase credit risk. Meanwhile, competition from large national banks and fintech startups continues to intensify. Regulatory oversight also increases compliance costs, while cybersecurity threats arise as digital adoption expands. Finally, inflation and market volatility could affect customer behavior and profitability. Now that we've covered the SWOT analysis, let's look at major events that have shaped the bank's growth over time. Major events. The history of Commerce Bancshares reflects steady growth and adaptability. It was founded in 1865, went public in 1966, and introduced ATMs and electronic services in the 1980s. 1980s. During the 1990s, it expanded into wealth management, and by the 2000s, it launched full online banking and broadened its commercial lending. Notably, the bank remained profitable throughout the 2008 financial crisis, upgraded its card systems in 2015, and achieved a record non-interest income in 2022. It continues to expand across the Midwest through 2024 and beyond. Next, we'll move into financial performance metrics to see how this long history translates into operational strength. Cost efficiency ratio, profit margin chart. Here, we can see Commerce Bancshares' efficiency and profitability trends. The bank maintains a low efficiency ratio, meaning it keeps operating expenses under control relative to revenue. At the same time, profit margins remain healthy, showing that despite rising technology and compliance costs, Commerce still converts a strong portion of income into profit. These metrics confirm the bank's excellent cost management and sustainable profitability, key indicators of long-term strength. Next, let's connect this to how the bank utilizes its assets. Net interest margin and asset utilization chart. Commerce Bancshares maintains a solid net interest margin, reflecting efficient lending practices and disciplined balance sheet management. Meanwhile, asset utilization remains stable, meaning the bank continues to generate consistent revenue from its total assets. Together, these figures demonstrate efficient earning power and prudent asset deployment, hallmarks of strong management. Let's not link this to overall profitability through the next chart. Profit margin, asset utilization chart. This chart shows how profit margin aligns with asset utilization. Commerce Bancshares consistently achieves strong profit margins while maintaining efficient asset use, showing that management effectively converts resources into revenue. This balance highlights operational discipline and sustainable earnings model, qualities that keep the bank competitive across cycles. Next, we'll build on this by adding return on assets to complete the performance picture. Profit margin, asset utilization, and return on assets. By combining profit margin, asset utilization, and return on assets, we can see how effectively Commerce Bancshares turns into its resources into profit. The bank maintains a steady profit margin and high asset utilization, leading to consistent returns on assets that exceed many regional peers. This reflects balanced profitability and disciplined resource management, ensuring stability even in changing market conditions. Now, let's connect those returns to shareholder value. Equity multiplier, return on assets, and return on equity. Commerce Bancshares maintains moderate leverage, which keeps risk low, while supporting strong returns on equity. This balanced approach demonstrates efficient capital use and strong financial management, which are key to its consistent long-term performance and shareholder confidence. Next, we'll wrap up by looking at where the bank is heading in the future. Future expectations. Looking forward, Commerce Bancshares plans to continue its conservative yet forward-looking strategy. The bank is investing more in digital technologies, expanding its digital banking base, and growing non-interest income through diversified services. With a solid capital foundation, disciplined risk management, and loyal customer relationships, it's well positioned for stable long-term profitability and sustainable regional expansion. Now, let's conclude with a summary of what makes this bank stand. In conclusion, Commerce Bancshares stands out as a stable, well-capitalized regional bank that blends tradition with innovation. Its conservative risk, diversified income streams, and forward-thinking digital investments make it resilient and positioned for long-term growth. Thank you for your attention, and I welcome any questions or discussions about Commerce Bancshares' performance and strategic outlook.